You're listening to the greatest multifamily investment advice show. My name is Adam Ras, and now I'm talking everything multifamily for an in-depth conversation, and I will be diving deep into raising capital, deals, and underwriting process. Welcome back to the greatest multifamily advice show. Today we have Mark Haroldsen, an exceptional guest and real estate investor out of Utah, focusing on scaling his self-storage facilities, a realtor, more than 20 years experience on real estate. Please help me to welcome our guest. How are you, Mark?
Good. Thank you.
Thank you a lot for being with us today, and I appreciate you taking the time.
Sure. My pleasure.
Thank you a lot. Mark, your background is super impressive in real estate for more than 30 years, but I would like to start with your beginning on self-storage. What was the upside for you to choose self-storage over multifamily or single family or commercial in general?
Yeah, that's a great question. When I started into real estate, my father actually inspired me. He had acquired a variety of apartments and really enjoyed the business. One of the key things that as he got older was hard is management. I'm not saying self-storage is less. I mean, I think it could be equally as great managing apartments, but for him, he wanted to diversify. We got into some commercial properties where it didn't require as much management. And what led me, I guess, ultimately to self-storage is I live in a growing a strong growing market in Wasatch County in Utah, and noticed that a lot of the self-storage facilities were full with a waiting list. So as a commercial real estate broker, I started looking around for pieces of ground because it just seemed like an interesting opportunity given what I found to be a need.
100%. So what is your target market right now on the self-storage, and how is the market in the US, inventory wise, national wide? How you see the market on the self-storage? Is growing?
Yeah, I think it's still growing from everything I read and see. In Utah, you would think some areas are oversaturated. I mean, there's too many self-storage units available for the population. But overall, throughout Utah, I mean, we're still a growing market, and there's still a need for it. And the interesting thing about self-storage that I've learned that was a little different from multifamily is the fact that even in down markets, occupancy rates are still high.
Yep.
And people still need self-storage. I mean, they're moving, changing jobs, lost a job or whatever. There's still an appetite for storing, personal belongings. And so whether the market's down or up, it seems to be a continuous need.
I think regarding the difference between the multifamily and self-storage, what is the actual target IRR or return of return when you're looking to invest on self-storage right now?
Yeah. So if you mean like return on investment, what's the market? It seems like it's market driven based on location, whether it's a location with most facilities being full. If you get into maybe a softer market where there's units that have, say, less than 75% occupancy, then I think that'll dictate what the demand is, what that maybe internalizes to a cap rate, for example. In Utah, for example, it's a very high interest for many investors because of the economics behind it. So our cap rates are, sub 6, 5s, even 4 caps lately, which is crazy considering where we were just a few years ago.
Yeah.
Here being in, the year 2022, nationwide, in smaller, softer markets, we're still seeing caps 6.5, 7s, but that's fading quickly. I mean, even nationwide, it seems like there's a strong appetite that's still keeping the pressure down on cap rates.
So How many so far? How many self-storage unit under management with you?
We have two, one in Wyoming, one in Utah. We're building a third right now in Utah,
Hmm.
and we're always looking for additional units that we can acquire, or if the parameters are right, we'll consider building.
I think this is one interesting part, which is for you, what was the upside of going to development with the self-storage versus buy and
Yeah,
hold?
yeah, it was partly being naive because I've never really developed anything, and it was pretty challenging just knowing what headwinds may come arise from interest rates to acquiring the capital, to getting the right contractor involved. There's just so many headwinds, if you will, that can
Zoning.
deter, zoning, you name it. There's just a myriad of factors that I really didn't quite understand that would come into play. So I went in pretty naive, which I'm glad I did looking back, because I probably just said, forget it. It's just too much to tackle. I'm glad I did, because we're full now and we're doing well. But in the middle of that, it was probably one of the more stressful things I've ever done in my life. So some of the key elements would be certainly to check around to see what the occupancy level is of the competitors, see if there's the ground available, see what the temperature is from the city council, if they're willing to look and consider more storage or not. Because if you can't get the council involved, it could be a dead end. Because there's all kinds of things that you have to resolve, from public input to, again, like you mentioned, zoning. And so those are some of the key elements, is just to see what the appetite is in the valley and see what the local jurisdiction feels about adding more storage.
And basically, you were the developer on this project. So how was experience with you as your first development project? Like, did you partner with contractors, or you had a partnership with a contractor team? And
mine was very basic. I just started talking to friends, people that had been real estate investors, just to see what their interest level was in. And nobody really wanted to take it on, to be quite frank, but they trusted me, being a broker for so many years, that I could sift through some of the weeds, if you will, about some of the parameters that and requirements that it'll take. And we just hung in there. We started with a general contractor. Unfortunately, that didn't work out. We had to replace them, but we hung in there together. We basically knew, whatever happens, we'll still remain friends after this, thank heavens. But in the beginning, we were pretty naive. We just had to take it a step at a time, and we had challenges like our first contractor not working out and getting them replaced with a contractor that was skilled. Just a huge learning curve for me. But again, because we all hung in there and we were patient, we developed a great property that remains, it actually exceeded our expectations. I think it's, we're just very lucky and fortunate, I think. And the biggest key factor, again, was we all knew and saw that there was a huge need for more storage in our market, because our competitors all had waiting lists.
Oh, okay, makes sense. Already the vacancy rate is like zero, as you're saying.
Right. Yeah, it was virtually zero, and the biggest indicator was just just simple fact finding of how full the other facilities were, and the fact that they didn't have any units available, and there's still people looking for units. From what we gathered, kept pushing us along to finally get this project completed and open up our doors.
So back to the lending part, what was for the self-storage as a commercial space, what was the challenges for you when you were starting the lending process? You've been working, I think, three properties so far.
Right. So financing is key unless you're all cash. We weren't blessed to have that kind of capital, or nor did anybody really want to throw out that much capital. So After researching different financing options, we learned that you can actually build a facility on an SBA loan. SBAs are typically tied to prime rate. Prime rate, as we know, is starting to go up. And so that's a
1.5.
little scary, but the flexibility there is with SBAs, you may know you don't have to come in with much more than 10-15% equity. And so it's a very high leverage deal. The other thing that was very fascinating to me is they also would do construction. So with those two key components, we decided to pull the trigger on an SBA product.
So can you elaborate a little bit on the SBA loan?
Sure. So there's two different types. There's a 7A and a 504 program. I'm not really skilled to go into a deep dive on both options, but we went with the 504, and that allowed us to come in with 10% equity. And again, that was all of our partners, contributing the cash to buy the land. And once we bought the land, that land became our equity. We contributed the land towards the lender. They saw the value of the land after an appraised value that was sufficient, actually more than sufficient, to contribute our 10% equity requirement. And then they funded the balance towards materials and labor. We did a feasibility study that said that we should be full within a couple of years, and some environmental reports and other kinds of lender requirements to see the strength of each partner, financial statements, that kind of thing. But that was a huge shot in the arm to know that we didn't have to come in with a ton of capital to get the thing off the ground. That was 7 years ago now. And I know some of the rules have changed, but from what I understand, that's still an option for some.
So what is progress right now on your development project? Is done already, or?
Yeah, so the one that I'm referring to, we opened our doors in February of 2019. Okay. Here it is, July 2022, we're 97% occupied and doing really well. The one that we're just starting now is a similar situation where we bought the land for cash with some partners and are considering an SBA loan for the same purpose. Contribute the land as our equity and have the lender finance the balance of the project.
Yeah, makes sense. I think my next question will be, what you see the impact of the new spikes of the interest rate, especially on the as you said, the prime rate is going up. It's I think 1.5 right now, with the recent federal spikes on the interest rate. So what you see the impact of this on the self-storage market, especially in Utah?
Yeah, again, it really comes down to if you can find the land that makes sense. I don't think it's enough with rates going up to deter people from building, just because, again, our demand is so strong still. Some markets are certainly oversaturated. I wouldn't advise, nor people that have been in the business would build in an obvious saturated city, for example, in Utah. But there's still some good growth, and it's such a great product when you compare that with retail, office. Quite frankly, even apartments. We've had such strong growth in apartments that people are becoming a little hesitant based on costs and how much they can actually charge now. I think storage is still more of a simple, safer play for a lot. I still see people trying to make those deals. The challenge for us, again, is lack of product. And so if you can find the dirt, again, I don't think these costs are scaring people away from moving forward. It'll be interesting to see, though. We're still seeing trade supply issues and costs, especially with steel going up. That I've heard from some multifamily guys that they're shelving some projects that they were planning on going forward just because of rising material costs and rates going up. But personally, on a self-storage front, I'm not seeing that yet. That's really a deterrent as far as scrapping or postponing a development project.
I think this makes sense as actual like structure of self-storage has more like pros on you don't like fix toilet anyway. So I agree on what you're saying on the market right now on the self-storage. Regarding what you said, can you explain a little bit more about what is your largest deal on self-storage and how many units was like how you managed to you mentioned I like your approach about buying the land on cash and then using the SBA loan. Can you talk a little bit more in one of your deals so we can
Yeah.
yeah.
Yeah, so my biggest deal is probably the one that we're trying to build right now. It's 600 or almost 600 units. It's just on 2.5 acres of land. We have 5 acres, but the city didn't want us to develop all 5 acres. So we created a buffer between the residential development and what they want is commercial. That'll be certainly the biggest that I've done. Our smallest one was a facility that we acquired, an existing facility up in Wyoming. And that one we just did a traditional bank loan where we came in with enough equity. It's actually a total of 10 partners. And it became a 50% loan to value for the bank. So the bank was comfortable, plenty of equity. And that's usually the easiest, simplest is if you can find, and that as far as the side note goes, that one is just under 200 units. And that's the smallest unit. The one that we started and completed construction, that one's 460 units. So it's kind of in between. That's where we bought the land and developed and finished the product. But the smaller one up in Wyoming, we came in with it was a price of almost $2 million. We came in with $1 million cash and financed the balance. And it was, really clean, nice deal, good room to raise rent still, which we're still doing to this day. And so, that's a little bit of my experience that we've done so far.
I think one of the main subjects here is raising capital. How was raising capital journey with you? Especially that you said that the first deal you had to raise $1 million for 50% of loan to value.
Yeah, so the very first storage deal I did was the one that I first started talking about, where we bought the land and developed it. That was not easy, just because there was a learning curve there. We only had 6 partners, 6, counting myself. And the nice thing is, once we finished, even though there's quite a few challenges along the way, it proved something. We had something to show for it. It was a story that people tangibly could run around and check out, look at our financials, that kind of thing. So it made the second acquisition actually much easier because I had a track record. It's always harder, as most of us know, to sell something you really don't have much experience doing. But once you get over that hump and you actually take the leap of faith and you've got something to show for it, then you've got a story to tell. And that second self-storage project in Wyoming has led to the third development. And I still have others, including our current partnership, ask me on a regular basis if I know of anything else. Is there any other opportunities? So I think just developing that history of credibility and a track record makes it much, much easier to do the next one after you've finished the first project.
100%. My last question will be, what is your superpower and strengths?
I don't know that I have any, other than just got to be honest and do what you say you're going to do. And when there's challenges, you're transparent, and when you're successes, don't hold back, don't be modest, talk about them, because people certainly like the success stories and want to know.
100%. This is basically my next question: is how the people can follow you and follow your success?
Say that again.
This is my next question: how the people can follow your success?
How can people
follow your success? Follow your success.
Follow success. Oh, heavens. I think the biggest thing, and I think you probably know this better than most, is you got to take the first step forward, right? And you got to believe in yourself. Because if you don't believe in yourself, somebody else is going to do it. You're going to kick yourself for not at least trying. So my mantra is believe in yourself and And if you don't try to fail, then you're never going to succeed. So you got to believe in yourself and take the first step forward and keep moving.
Agree. Thanks again for being with us today, and I would like to bring you again to the show to talk more about self-storage and the progress in your new project, the development.
Yeah.
It's, by the way, in Utah, correct?
Say that again.
The new project is in Utah, correct?
Yes. Yeah. A new self-storage project. We're working on building 600 units.
100%. I would like to bring you again to talk more about the development and the updates about the projects. And yeah, thanks again.
It would be my pleasure. Thank you, Adam.
Thank you a lot.